Hi, good evening, ladies and gentlemen. Welcome to the Center for Market Education CME webinar. I'm Consilz, and it is my pleasure to be a moderator for this webinar on ethical finance and green economy. 77% of people in Southeast Asia living along the coast or in low-lying river deltas will be threatened by rising temperature and sea levels. Annual economic loss of $657 billion from natural disasters in Asia Pacific. 60% are drought-related agricultural losses. Asia's economy will be 2.6%, smaller by 2050 due to lack of climate resilience. The threat of the climate change, social and economic outcomes has raised critical questions about the role of the financial sector in building a carbon-neutral global economy. Moreover, the spread of disruptive innovations and the COVID-19 pandemic also brought to the forefront relevant ethical and governance issues for the decision-making process in the financial sector. Through this webinar, we are hoping to understand more on the latest business practices in ethical finance, the role of corporate diplomacy, and we are trying to encourage the rethinking of policy recommendations toward the shift to a green economy, both from a general economics and Islamic finance perspective. Before we get started with the webinar, let's invite Dr. Carmelo Ferlito, CEO of the Center for Market Education, CME, to give his introductory remarks. Dr. Carmelo?
Thank you, Consilz. I'm very glad to welcome all the attendees and the panelists tonight to this new event organized by the Center for Market Education, this time in cooperation with IAIS Malaysia. It's an honor for us to be in partnership with such a prestigious institution. And this is our first event for 2021, so it's our way to welcome the year. I think we are starting with a very provocative topic that can be also divisive. Probably not all among the panelists or the attendees or the people in the Center for Market Education have the same perspective on ethic finance and on green economy. But this is precisely in the spirit of the Center for Market Education. And one of our two most important missions is to promote pluralism and multidisciplinarity in economics. So we strongly believe that is through these different approaches that also our discipline that is somehow suffering crisis can overcome this crisis. One of the speakers tonight, Professor Maria Alejandra Madi, is also one of the persons most active in the World Economics Association, that is an organization also aiming to promote pluralism. And the Center for Market Education will partner with the World Economics Association for an online academic conference on April entitled The Great Lockdown, an Interpretative Attempt. And I hope that the academicians here with us tonight will have a chance to participate also at this event. And all the details can be found on our website, marketedu.org. On the other side, I'm very much interested in the issue of ethical finance from a personal perspective, because for the ones that don't know, I started my research career in economic history, and specifically on the history of ethical banking in the Christian environment in the Middle Age and the modern age in Italy. So I'm strongly interested in the evolution of this topic, and I believe that there are parallelisms between the way in which traditionally the Catholic Church faced the issue of finance with the way in which this issue is touched by the Muslim world in the Islamic law, probably having also a common geographical origin. There are element of commonalities in this sense. And I'm very curious to see how our speakers will combine these two topics together. So the need somehow, I mean, I think we all agree that the environment is an important issue in today's conversation, but of course we are divided by the recipes, and how this issue can be somehow tackled thanks to instruments of finance and peculiarly of ethical finance. So I'm here actually only for this welcome and to say thanks to IAIS for joining us. Thanks to Professor Maria and Dr. Madi for having accepted to be our speakers. And I look forward to hear their presentations. Just let me remind you what's going on the Center for Market Education. So beyond the academic conference that I just mentioned, we are going to have an introductory course in economics entitled Economics for Real People. So in the attempt to make economics understandable by lay people, and this will start on the 23rd of February and will be conducted over 8 sessions with 4 different speakers, myself, Professor Lingel from University Francisco Marroquín in Guatemala, Professor Renato Lima de Oliveira from the Asia School of Business, and Professor Clyde Bregu from University of South Bend in the United States. So these are a few of the things that are boiling in the pot of the CME. But for tonight, I really want to extend a big thanks to our speakers and our moderator and our prestigious partner, IAIS Malaysia. And I look forward to enjoy the conversation.
Thank you, Dr. Carmelo. Now let's welcome Prof. Dr. Mohammad Azam Mohammad Adil, International Institute of Advanced Islamic Studies, IAIS, to deliver his introductory remarks. Prof?
Okay, thank you very much, Dr. Consilz, as a moderator for this webinar. Assalamu alaikum and a very good evening. Dr. Carmelo, Ferlito, the CEO of CME, Prof. Maria Madi from Green Economics Institute UK, Dr. Mohammad Mabu Ali, Associate Fellow of IAIS Malaysia. On behalf of IAIS Malaysia, we would like to thank SME for inviting us to be partner for this very important webinar on the ethical finance and green economy. Ladies and gentlemen, over the last few years, ethical finance has attracted considerable attention from both conventional and Muslim investors worldwide, as evidenced by growing interest in socially responsible investment or SRI instruments. Green Sukuk is one of the Sharia-compliant SRI instruments for renewable energy and other environmental sustainability projects. Islam is fully supportive of ethical finance and green economy. The Quran and the prophetic traditions emphasize the importance of environmental conservation and ecological sustainability. Islam commands mankind as the vicegerents of God to take care of the environment and nature and to avoid any act that is detrimental to them. This corresponds to the principal purposes of Sharia, what we call it Maqasid Sharia, which are intended to realize public benefit or maslahah and eliminate harm and destruction, that is mafsadah, outlined under 5 main headings: protection of life, preservation of religion, upholding the integrity of human intellect, protecting the family, and protection of lawfully owned property. Al-Qardawi, however, added environmental conservation and preservation as another ultimate objective of Sharia, having an equally important position as the 5 goals. Malaysia, being home to the world's largest Sukuk market, has pioneered the issuance of Sharia-compliant ethical finance like Green Sukuk. On July 28, 2017, the Securities Commission announced the debut of the world's first Green Sukuk under its SI Sukuk framework, with the issuance of Tadau Energy Sdn Bhd, a Malaysian-based renewable energy and sustainable technology investment firm, to finance the construction of large-scale solar photovoltaic power plants in Kudat, Sabah. This milestone is the result of a joint effort between Securities Commission Bank Negara Malaysia and the World Bank Group to facilitate the development of green financing and investor participation in SI Sukuk. Following the success of Green SI Sukuk Tadau, Quantum Solar Park Malaysia launched the world's largest Green SI Sukuk worth Ringgit Malaysia 1 billion in October 2017 to fund the construction of Southeast Asia's largest solar photovoltaic plant project in 3 districts, namely Kedah, Melaka, and Terengganu. In 2018, Indonesia issued the world's first sovereign green sukuk of USD 1.25 billion sukuk wakalah. More green sukuk have been issued since then in Malaysia and other countries to support environmentally sustainable infrastructure projects and to promote ethical finance. Green sukuk, like other ethical finance instruments, plays an important role in the preservation of the environment and the sustainability of the earth. It facilitates and increases the broader participation of conventional investors in the sukuk market, especially those looking for more ethical and socially responsible investment opportunities. Green sukuk also helps bridge the gap between sustainable investors and sukuk investors who aim to place their money in a scheme that complies with certain values. Islamic finance should therefore provide more avenues for the growth of green sukuk as a financial instrument for sustainable development. My colleague, Dr. Mahbubi, perhaps later will enhance on this topic. Before I end this introductory remark, I would like to thank again CME and also the speakers for having us, IAIS Malaysia, for this webinar. Thank you very much.
Thank you, Prof. Thank you. All right. So first of all, let me briefly introduce to you our first guest speaker. Dr. Maria Alejandra Madi holds a PhD in economics. Her academic career includes a long-term professorship at the State University of Campinas, Brazil, and visiting professorships at the University of Manitoba, Canada, and at the University of Consilz, Germany. She currently is director of the Green Economics Institute Academy, UK, and senior researcher and professor of economics at Cities and FIA Business School, Brazil. She is also chair of the World Economics Association, WEA, online conferences program, editor of the WEA Books Conference Series, and founding editor of the WEA Pedagogy blog. Because of her interest in a pluralist economics education, she has been assistant editor of the International Journal of Pluralism and Economics Education. She also published many research papers and book reviews in international journals. Her presentation title in this evening is Ethical Finance and Green Economy. Without any further ado, ladies and gentlemen, please welcome Dr. Maria. Dr. Maria, the stage is yours.
Thank you very much for the presentation and the introduction to this webinar. I'm very happy to participate in the first webinar of the Center for Market Education, and it is really my first activity as a public activity as fellow of the center. So I'm really very happy to join you today and talk about finance, business, and green and the green economy. So I will share with you my screen. Is it okay? Okay. Thank you very much. So we can start, remember a little bit the complex business background that we are living today. After the global crisis, we have a decade of zero-bound interest rates that have indeed inflated share prices and also stimulated a lot of mergers and acquisitions. So you have, because of this, a very important consequence in terms also of the attitude of managers. I think that because of this decade of zero-bound interest rates, we have stimulated the short investing investment horizon in terms of the management of business. This short-term horizon is related to the focus on shareholders instead of the stakeholders. So I think that this is one of the main points of our discussion today, which is the relationship between ethical finance, stakeholders, and shareholders. Besides, we need to remember the digitalization of the economy and the society, climate change, social claims because of inequality, and at the end of 2019, we start with this challenge of COVID-19. So I think that the complex business background is important to think about which are the new trends and if which are indeed what we can get in terms of big achievements when we think that this scenario needs to be really rethink. In some way, this is one of the aims of our webinar today. But despite these complex business challenges, we have had indeed a shift to the green economy in the last 5 years. I think that the last decade was important in this to remember, but I think that it is important to highlight that the last 5 years has been a period of change. In this process, I think that there have been a deeper concern about energy systems, growth, environment, climate consequences, and China has been the leader of green investments, although other countries have already been, as has been already said, been increasing the green investments. In 2020, we have the COVID challenge, the great lockdown, as we are proposing in our discussion in the World Economic Association, and we have had a decline in emissions, and many countries have started to plan a new relationship indeed between the market and and society and the state in terms of planning green deals or green climate-friendly recovery. This has been a challenge because of the great amount of investments that this kind of initiative requires, mainly in a context of difficulties, financial difficulties of the states because of the COVID-19. But in order to give you a scenario of what is needed, what is required to get these zero carbon technologies ahead, the Morgan Stanley has presented some ideas to think about this scenario. If we are going to make some progress in this ethical finance and green investments, we will need a lot of money. We need a lot of money in terms of renewables, electric vehicles, carbon capture, hydrogen, biofuels. In order, an amount that it is estimated, we will need $50 trillion till 2050 or 2050. This is a lot of money. And if we are thinking about the targets of the Paris Agreement, but if we think in terms of this in these targets, indeed, we will need to reduce. We need a lot of money. We need to reduce the emissions, and also we need to think about which will be the patterns of energy that will we adopt. So the relation between finance and this green economy, finance and this and business today is a shift, not only in terms of attitudes, as we will see, but it is also in terms of patterns of growth, patterns of energy in our relationship with the environment. So it's not business as usual. It is really a big change. until now, we can say that the private sector has had the main role in this carbon neutral economy, in building this carbon neutral economy. This is very important because I think that when we think in terms of the actors, because ethical finance or even green economy need to be thought in terms of actors. Not every actor is participating the same way. The private actors and institutions have been the main driver for mobilizing climate finance. And the most important issue is to remember that one of the sources, important sources in this kind of research, that is the climate initiative policy, the reports of the climate initiative policy show that these actors rely mainly on their own balance sheets to finance energy projects. This is very important. This is very important because there is a lack in some way. There is a lack of energy finance. We need to scale up this energy finance. The public sector has diminished the participation in terms of climate finance. In terms of the public sector, they're not the national states. They're mainly development financial institutions that are participating in this kind of climate finance initiatives. And I remember that it was at the COP in 2017 and 18, and there was a big discussion about climate funds. They were trying to develop, mainly the developed nations were starting, and Europe as the leader, were starting to think about these climate funds and the role of climate funds as a public sector source of green finance. But this is really still very low in terms of the participation of the global initiatives. So we need to think about this. So we are thinking about climate finance, and a climate finance that has been growing, but has been growing mainly because of the private actors. And in the same context, we are discussing how the private actors can engage in responsible and sustainable investment. So as I say, this is not business as usual. It is business in another way. It is exchanging business, thinking about these new targets that are trying to not only to avoid harm, but also to benefit all stakeholders. So it's a shift from shareholder value to the benefits from to all stakeholders. And also it's a business that is a model of business that contribute to societal problems. So it is a big challenge to think about this green economy, this climate finance in a green economy with new business models that are responsible, that are sustainable, that can be more than only financial performance. In this way, we need to what is the state of the implementation of the sustainable investment. We are still stuck in some way in this short-termism. We are still a little bit focused on short-termism. To change, we will need a new infrastructure in terms of skills, data, technology, and management. Now, there is a need to change also the management of business. It's not only because if not, we will continue to do business as usual. And in terms of the drivers, who is indeed more is the leader of this process of change? As we know today, big business is mainly it relies on the institutional investors. And so nowadays, I think that institutional investors are driving the process of this sustainable agenda. You can see here in the screen that the politicians or regulators are not driving the the sustainable agenda. This agenda is not being led in some way by the state. This is an agenda that is being led by the market. But there is one important issue to highlight, that although this agenda is being led by the market, by the institutional investors, mainly there are a lot of private equity initiatives in this way. These strategies that they have adopted sometimes are not well articulated. They are fragmented. If you can see on the screen, the sustainability integration, a very articulated strategy in terms of targets, in terms of means, in terms of ends, is only adopted by 50% of the business in the survey of the KPMG. Indeed, this is a challenge not to consider only the sustainability or responsibility in terms of impact investment or even thematic invested, or even not buying things from suppliers that are not adopting responsible investment. It is a more deep, it's a deeper process that requires a lot of changes in terms of the articulation of all the activities of the business. That is why we nowadays the relevant barriers to introduce this sustainability integration are still the short-term perspective in terms of financial targets, the lack of data. What are the standards? I think that all the private sector is demanding standards. Which are the standards to introduce effectively introduce this kind of sustainable integration? And in terms of costs, we need to be aware that if this is a very challenging process for big business, this is a very costly process for small and medium firms. This is very important, mainly if we consider today this COVID, the role, the impact of COVID in terms of the small and medium business. Then we can imagine which is the challenge that this will have in terms of the future of the adoption of this kind of strategy for small and medium. And in terms of larger firms, in terms of the big firms, there is a very important word that is being introduced in finance today, that is greenwashing. And we will develop a little bit this greenwashing when we start with the example of green bonds. So in this way, greenwashing, so to anticipate this greenwashing is related to firms get money to introduce changes, but indeed they do not introduce. So this is a kind of greenwashing nowadays. When we have a lot of difficulties in regulation in terms of the mobility of capital and laundry washing, but now we are introducing this new kind of speculative attitude to finance, that is green washing. And this is important when we analyze, for example, the attitudes. Because despite many institutional investors or other firms have adopted this kind of sustainability integration, they are very skeptical in terms of the results of this process. And there are also a lot of opportunistic attitudes. That is why we can link these opportunistic attitudes with this kind of new greenwashing. And in emerging markets like Brazil, for example, we are not developing too much this kind of business. Only those firms that are related to capital markets, because in capital markets, this kind of attitude towards ethical finance and green economy is good to get more to increase the value of shares. But I think that one important thought about the policy recommendations, I think that we can get if we consider the analysis of the example of green bonds. What is a green bond? There has been a lot of discussion about green bonds, and then what is it? Which are the challenges today in terms of green bonds? I think that it is important today in terms of ethical finance. A green bond is financial asset, can be issued by not only by banks but only by non-banks. But the problem is that there is no uniform standard for issuing green bonds. Nowadays, we have the market of green bonds, but you do not have standards. The aim of the green bonds is to finance the transition to a sustainable economy, but there is no standard to issue these green bonds. Nowadays, the euro is the main currency in terms of the market of green bonds. This is important. That is why last year there was a consultation in terms of the financial authorities of the European Union to know more about which are the challenges indeed to regulate the green bonds, because it is starting to grow, but at the same time, the regulators are observing that you have a lot of greenwashing in this green bond market. So I think that there are issues, important issues, not only in terms of the issuers of the bonds, but also in terms of the investors, those that demand these bonds. Because any company can issue green bonds, regardless of their main business activity. So you have an heterogeneous market of green bonds. But that is why there is a lot of uncertainty and the reputational risks regarding green definitions and the eligibility of green projects. What is today, what is happening today is that we need more reporting, review, and verification of green activities. Because as you have a very, very big amount of issues, you do not exactly know if they are really implementing green activities. So this is a challenge nowadays. There is the regulation is still being studied, but I think that it is a very important aspect of our discussion today, because we know that is a direction in terms of the change, the shift to business, to green, to a green economy business in some way. But at the same time, we need to scale up finance, because till now, private actors have been the main driver, but they need more money to do this. But if we do not regulate in some way, at least the green bonds, which will be exactly some standards, this will be a barrier to continue this in a sustainable way. I think to avoid, I always say, to avoid the green bubble, we need to regulate the green bonds, or even other kind of financial instruments that are linked to this green fund. Because if not, we will favor green bubbles, green or even greenwashing. It is interesting because if we read the financial reports of some banks, they're saying it is a good nowadays because of the low interest rate. This is good to invest in this kind of assets, but we do not know exactly which are the assets. That was a very, very interesting a very interesting thing happened to me in this research about ethical finance, because I realized that one of the firms in Brazil that is the leader of deforestation has issued a lot of green bonds. So it is interesting. We need to check who is issuing indeed these green bonds, that is why, as I said, this regulation is demanding a lot of reporting, review, and verification. And in this way, and in this sense, the problem with this regulation that perhaps it will be so expensive that it will not be able to complete, to achieve the targets of regulation in terms of efficiency, equity, or for example, as an example. That is why this is the complex scenario of business. This is the example of the challenges to ethical finance nowadays because of this greenwashing, the challenges to regulation of this initiative. And in terms of the future, if you are going to implement this green business in some way, in considering the ethical finance, there is the emergent role not only of responsible of sustainable investment, this idea. It is a role of corporate diplomacy. The role of corporate diplomacy, because why this is important? Because if business is look through the corporate diplomacy agenda, I think that we cannot look at business not only at the immediate looking. No, we cannot look only focusing on the immediate results. We need to trace the consequences of the policy of the business in one group, but not only one group, but in all groups. This is very important. So all the stakeholders should be considered, or at least the main stakeholders. In this way, regulators are part of the corporate diplomacy. Regulators, investors, the workers, suppliers. This is another look. We are proposing another look to the business scenario. But what are the key lessons of the sustainability integration adopters, and those that have considered this sustainability integration in the context of corporate diplomacy? There are no shortcuts, so it is a process that takes a lot of time and requires a lot of skills, and requires also standards, data, and metrics. So it is interesting because the proper industry is required standards. So I think that if you regulation, we need to think about which are the targets of regulation. But I think that in this way, perhaps this demand of industry in terms of standards, in the sense of the which kind of assets can be issued, and which are the expectations of the investors. Perhaps this is one important relevant aspect of the regulation in the future. So to finish, I would like to highlight the last ideas. We can certainly, in our discussion, put together corporate diplomacy and the environmental and social governance. We need to design a compromise, an agreement among stakeholders. The regulators are part of them. Now we cannot. It is another perspective. This is not an opposition between the state and the market. You include the regulators in the set of stakeholders. We need to maintain at the same time a short-term and a long-term perspective. There is no. There is as so far today we have this opposition between short-term and long-term. We need to put this together in a perspective. In order, we need to perhaps rethink the financial targets, and in order to not to put to add some long-term bad deleterious consequence to the process of investment that is really a process that is related to society. So we need to think in terms of the societal claims. And then we need to, indeed, the societal claims need to be thought in terms not only in terms of environmental, but also in terms of social justice. So I think that the role of business nowadays is being thought as in a different way. We are moving faster, I think, perhaps than expected because of COVID, that we cannot continue with this business as usual, and we need to get into another framework that it is about responsibility, sustainability, and corporate diplomacy. So it's interesting this conceptualization, because the role of business is being enlarged some way. It is not about diplomacy between nations. It is about diplomacy among firms and their stakeholders. So many thanks for listening to me today. Thank you very much.
Thank you, Prof. Maria. So now let me briefly introduce to you our second guest speaker. Dr. Mohammad Mabu Ali is the head of economics, finance, Awqaf, and Zakat Unit Come Associate Fellow at the International Institute of Advanced Islamic Studies, IAIS Malaysia. He also served as a Sharia committee member of Affin Islamic Bank. Previously, he was a researcher at the International Sharia Research Academy for Islamic Finance, ISRA. During his stint at ISRA, he had contributed to numerous ISRA's research publications. He was a lecturer at the University of Kuala Lumpur and UNITA International University. He received a PhD in Islamic Banking and Finance from the IIUM Institute of Islamic Banking and Finance, Malaysia. He holds a bachelor's degree in Sharia Business and Financial Management from the Islamic Business School, Tazkiyah Indonesia, and Chartered Islamic Finance Professional CIFP from INSIF, the Global University in Islamic Finance, Malaysia. This evening, he will present to us on the topic, Green Sukuk, an Islamic finance instrument to promote ecological sustainability. Without any further ado, ladies and gentlemen, please welcome Dr. Mohammad Mabu Ali. Doctor?
Thank you, Dr. Consilz. Can you see my slide? Okay. Bismillahirrahmanirrahim. Assalamualaikum and very good evening. Respected Dr. Carmelo, Associate Professor Dr. Azam, Prof. Maria, and not to forget our moderator for this evening talk, Dr. Consilz. Ladies and gentlemen, Prof. Maria has just discussed earlier on the important aspect of green economy and the need for the funding side using green bond. Allow me to zoom in my presentation into the Sharia compliant financing aspect of green economy, namely green sukuk, as an Islamic finance instrument to promote ecological sustainability. So in the interest of times, this is my agenda for my presentation, for 20-minute presentation. So we will cover the emerging trend of SRI instrument, socially responsible investment instrument, and the evolution of green sukuk globally. We'll also discuss a little bit on the concept of green sukuk and how it differs from green bond, as has been discussed earlier by Prof. Maria. And also I will touch a little bit on the Malaysia SRI Sukuk framework and various experience in the issuance of Sukuk or green Sukuk globally. Lastly, the discussion will venture into the prospect and challenges of a green Sukuk market now and moving forward. Ladies and gentlemen, it has been indicated earlier by the introductory remark of Prof. Azam that over the past few years, there has been a growing interest toward ethical finance and socially responsible investment, or SRI. This is particularly true due to the growing investors' awareness and demand toward ethically and socially responsible investment. Not only that, the awareness and the interest toward ethical finance also came from the supply side. The supply side, for example, in 2018, 28th world leading bank came together to establish the principle for responsible banking under the United Nations Environment Programme Finance Initiative. So this initiative could definitely shift the current capitalistic financial regime toward a more sustainable banking system and help the bank to demonstrate how it can make a positive contribution to people and planet. In Malaysia, for example, Bank Negara Malaysia in 2017 issued a concept paper of value-based intermediation, where moving forward, the Islamic financial institution is not only assessed by the financial ratio, by its achievement toward the profitability and see, but also looking into their contribution and impact toward people and planet. So we can see the growing awareness from demand side, investors in this respect, from supply side, financial institution, as well as from the regulator. Like Securities Commission also, for example, in 2014, introduced the SRI Sukuk framework to revise the existing Sukuk guideline so that the Sukuk can be issued where the proceeds of which may be used to fund or to finance a designated SRI or eligible SRI project. One of the areas they are normally associated with ethical finance is environment and its preservation. And green bond, as discussed earlier by Prof. Maria, as well as green Sukuk, become a common instrument to serve the aspect of ethical finance and socially responsible investment in the global market. And you can see now a number of green bond and Sukuk have been issued in the global market to finance the environmental friendly project. The United Nations as well as G20 has also acknowledged that green finance is an important instrument to fund the global policy changes. And we can see globally the green bond witnessed the upward trajectory between 2013 to 2017 and was projected to grow exponentially to up to $1 trillion by 2020. This is the evolution of green Sukuk from green bond. Yeah, of course, the idea of the issuance of green bond and green Sukuk is similar to cater basically the financing of environmental friendly project. But the only difference between the two is that the latter, or green Sukuk, is designed basically to attract the Muslim customer to provide an instrument that comply with the Sharia principle. So the idea of green bond as as you can see in the slide, started to materialize when the European Investment Bank in 2007 launched a 600 million euro climate awareness bond focusing on renewable energy and energy efficiency. And this was followed by the World Bank in 2008 when the bank issued a total of 440 million US dollar green bond to support climate bond to support climate focused program for Scandinavian pension. Since then, we can see in the slide a number of green bonds have been issued in the global market. Meanwhile, the history of green sukuk, as you can see here in the green color, started when in July 2017, Tadau Energy Sendirian Berhad, a Malaysian-based renewable energy and sustainable technology investment firm, issued the world's first green SRI Sukuk up to 250 million ringgit, which was issued to finance the construction of large-scale solar power plant in Kudat, Sabah. And then it was followed by the issuance of Quantum Solar Park Malaysia in the same year. And it was considered as the world's largest green SIS sukuk, for the purpose of financing the construction of 3 large power plants in Kedah, Malacca, and Terengganu, Malaysia. And also in December 2017, PNB Merdeka Venture, a wholly owned subsidiary of Permodalan Nasional Berhad, issued unrated green SRI sukuk via its sukuk program of up to 2 billion ringgit to fund the construction of the Merdeka Tower. In Indonesia, the green sukuk was issued in 2018, by the issuance of the world's first sovereign green sukuk. That is the sukuk that was issued by the government up to 1.25 billion US dollar, structured based on the Wakalah concepts. So 2020 marked the 3 years anniversary of the first green sukuk, from the issuance of Sukuk Tadau, a unique capital market instrument merging green and Islamic finance, where the Islamic finance is integrated, combined with the green project, with the green initiative. In Malaysia, as highlighted earlier, pioneered the first green sukuk, and to date has the largest number of green sukuk issuance globally. Of course, Indonesia, the neighboring country, has also raised the most sophisticated and through green sukuk issuance via its Wakalah sovereign green sukuk. And now in the market, we have 6.1 billion US dollar that have been raised through 12 unique green sukuk issuance from Indonesia, Malaysia, as well as the United Arab Emirates, and 1 multilateral development bank as of July 2020. And most of the sukuk, green sukuk issued in the market are basically US dominated issuance, making up 65% of the green sukuk issuance, followed by euro denominated 18%, ringgit denominated 16%, and lastly rupiah denominated 1%. Briefly, allow me to discuss a little bit on the concept of green sukuk from an Islamic perspective. So green sukuk is basically a form of sukuk, is a kind of sukuk where the sukuk is defined by the Sharia scholar as a certificate of equal value which represent an undivided share in ownership of tangible asset, usufruct, and services, or in the ownership of the asset of particular project or special investment activity. So the return from the green sukuk or from the sukuk issuance will be enjoyed by the issuer in the form of margin or in the form of rental, as well as in the form of profit sharing ratio, depending on the underlying structure, depending on the underlying contract. If the contract used to issue the sukuk is based on sale-based contract like murabaha, istisna, salam, for example, then the return that the investor entitled is in the form of margin or profit. But if the sukuk is structured based on ijara also fi dhimmah, then the investor will receive a regular rental from the leasing contract. Likewise, if the sukuk is structured based on partnership contract, like mudarabah and musyarakah, then the investor will enjoy a profit sharing ratio agreed upfront. So a green sukuk is basically a Sharia compliant sukuk which is designed to finance a renewable energy project and other environmental asset, the proceeds of which is used to preserve the environment, natural resources, conserve the use of energy, promote renewable technology, and reduce greenhouse gas emission. In this respect, in 2014, for example, in Malaysia, the Securities Commission has revised its sukuk guideline by incorporating the new requirement for the issuance of SRI sukuk. The new sukuk guideline explained that the proceeds of SRI sukuk can be used to preserve the environment, natural resources, conserve the use of energy, promote the use of renewable energy, as well as to reduce greenhouse gas emission. This basically the eligible SRI project that is listed under the Securities Commission SRI Sukuk framework. Ranging from natural resources, for sustainable land use, sustainable forestry or agriculture, to renewable energy, community and economic development, including for the Awqaf property, for the development of Awqaf property of asset. This can also be can also fall under the green sukuk. So briefly, what is the difference between green sukuk and green bond? Sukuk basically, as defined earlier, represent the ownership of a well-defined asset. So a sukuk holder essentially own the asset. That's why a sukuk holder may be affected by the asset-related expenses, may be affected on the with the market value of the underlying asset, and when the sukuk holder sell his sukuk, he is basically selling his share to the asset. On the other hand, the green bond, like other typical bond, it's only represent pure debt obligation. That's why bondholder are not affected by the asset-related expenses, and the bond depend only on the credit worthiness of the issuer. It is nothing to do with the project, nothing to do with the underlying asset. That's why, because bond only represent the obligation, the debt obligation by the obligor, by the issuer, then selling a bond is basically sale of debt or sale of obligation. Again, this is basically the SRI Sukuk framework, where in 2014 Malaysia has introduced a sustainable and responsible investment Sukuk framework to facilitate the financing of sustainable and responsible investment initiative. So it is designed to preserve and protect environment and natural resources, to meet demand of retail and sophisticated investor for access to a wider range of investment product, and to facilitate larger participation in the Sukuk market. The SRI Sukuk framework under Securities Commission is also intended to facilitate the creation of an ecosystem conducive for SRI investor and issuer. So again, this some classification of green sukuk looking at the Sharia contract. unlike green bond, where the structure is based on loan contract, bond based on a loan transaction, it just represent the obligation from the issuer to bondholder. But in Sukuk, because it represents the ownership to the undivided asset, so the structure can be based on different Sharia contract, be it it can be structured based on sale-based contract like Murabaha. Typically, the green Sukuk in the market is structured based on commodity Murabaha or Tawarruk, or other sale contract like Istisna for construction, building and manufacturing project. Also, the green Sukuk can be structured based on lease-based contract like Ijara or leasing, or Ijara Mawsuf fi Dhimma, forward lease. And some structure in the market, the green Sukuk is structured based on the combination, even combination of sale-based contract as well as lease-based contract, like Sukuk Tadaw that we'll see later on in the structure. It started with the Istisna concepts to basically enter into a project to be manufactured, to be constructed, and then followed by a forward lease, and ended by a normal ijara as well as a sale contract at the end of the contract via a redemption mechanism. Also, we can structure green Sukuk based on partnership-based contract, where the return can be shared between the issuer and investor based on agreed profit sharing ratio, either via Moderator concept or Musyarakah concept. Also, the Sukuk can be structured based on agency contract, namely Wakalah Bil Istismar or investment agency. Let me share with you some examples, some experience of the Sukuk structure in the market nowadays. This is the solar Sukuk programs that was issued by Quantum Sendirian Berhad, and it was deemed as the world's largest Sukuk issuance that registered up to 1 billion ringgit. And was issued to finance the development of power plant in 3 regions in Malaysia, and was structured based on Murabah or commodity Murabah or sale-based contract. This structure, of course, I don't have time to go through and to discuss in more detail on the structure and how it's worked. But if you are interested to read further, we'll share the slide after the presentation or after the events. Another example of green Sukuk is the green Sukuk that was issued by PNB and the Green Building Sukuk PNB Merdeka Venture to build the Merdeka Tower. The proceed was used to partly finance the Merdeka, the building, the construction of Merdeka Tower, and again it was structured based on the concept of Murabaha. This is the structure where MIDF investment served as the agent, the wakil for the whole structure. The green SI Sukuk Tadaw was the world's first green Sukuk issued in the market, which was issued to finance the construction or the development of power plant in Kudat, Sabah. And it was used based on the combination of both sale and lease-based contract. So we can see under Islamic principle, it was started, it was structured based on istisna at the first place, and then followed by ijara mawsuf fi dhimma, forward lease to justify the advance rental to customer, to investor in this respect, and then followed by ijara or normal ijara contract after the completion of the construction. And then later on, Tadaw Energy will return back the proceed, which is 250 ringgit, 250 million ringgit to investor by way of redemption via a sale contract. This is the structure of Tadaw Energy based on, again, it is based on the combination of istisna, manufacturing sale contract, together with forward lease, followed by ijara, and completed with a sale contract at the end during redemption mechanism. As for the Indonesia sovereign green sukuk, and was regarded as the world's first sovereign green sukuk in the market. It was issued to finance the climate and environmental friendly related project in Indonesia, up to 1.25 billion US dollar. Yeah, and the profit rate offered by the Indonesian government was 3.75% and was structured based on the concept of wakala. This is how it works, and it was deemed as one of the most sophisticated or complicated sukuk structure or green sukuk structure so far. So some emerging themes for the issuance of green sukuk in the market over the past few years is on the social sukuk toward positive social outcome, sustainable sukuk for positive environmental and social outcome, as well as the sustainable development goal sukuk aligned with some or all SDG or sustainable development goals listed under the 16, yeah, the 16th SDG. 16 or 17, I forgot already, listed under the United Nations, and also sustainable and responsible investment, SRI Sukuk. Even SRI Sukuk was issued before the issuance of green Sukuk by Sukuk Ihsan, for example, to finance the building of school. Yeah, of school. That was the world first SRI Sukuk. Yeah, and it was not classified under green Sukuk. And also another themes for the issuance of green sukuk is the sukuk for which is issued for blue sukuk to fund marine and ocean-based project. Yeah. Last part of my presentation on the challenges. Of course, as other financial instrument, Sharia compliant financial instrument, as well as of course conventional green bond, green sukuk is facing a number of challenges in its development. For example, small secondary market, investor confidence, high risk profile, lack of classification of green asset and project by financing, and marginally higher cost, as well as restrictive issuance criteria. Let me briefly discuss one by one. In terms of the small secondary market, the secondary market for green sukuk is very small currently. This is due to small number of investors holding sukuk fund. Of course, currently we have only 12 green sukuk in the market. That's why the investor, what we call the market, the customer base is very small. Then it may it affect the what we call the secondary market size. Yeah, and other institutional investor which traditionally require robust secondary market for meeting the investor liquidity expectation. Second challenge is the investors confident. Yeah, the investor confident how to assure the investor that the sukuk proceed will be used for project with economic value while meeting accepted and credible green standard. Another challenge is high risk profile. It may the green sukuk may expose to high risk profile because many environmental friendly projects involve a sophisticated degree of new technology due to construction and operation of green technology. Other challenge is lack of classification of green asset and project by financial institution that may prevent the pooling of green asset for green sukuk issuance. And in terms of cost, green sukuk may impose a marginally higher cost due to an additional review and operating cost for what they call for the project to be classified under SRI eligible project. And lastly, of course, it may give a restriction to the issuer as well to the investor for the issuing green sukuk, because the project should be specific and designated for only an environmental friendly project in this respect. However, Green Sukuk, the future direction, the future prospect of Green Sukuk is promising, and I believe due to a number of factors. First, especially in the context of Malaysia, the government aspiration to position Malaysia as the home for the socially responsible investment and green technology hub by 2030. Another factor that may be a catalyst for the future prospect of Green Sukuk is the substantial increase of demand for both energy supply and energy financing in Malaysia in particular, that would open a wide room for Green Sukuk to prosper. For example, the Malaysian Green Technology Master Plan aim to boost the growth of its green technology sector with a targeted revenue of 180 billion ringgit alongside 200,000 green job creation by 2030 as part of the government aspiration to make Malaysia as the green technology hubs. Lastly, on the investor awareness, there is a growing awareness of both conventional and Muslim investor toward SRI, socially responsible investment and ethical finance. Therefore, Green Sukuk may facilitate and increase the broader participation in Sukuk market by the conventional investor looking for more ethical and socially responsible investment. It also helps bridge the gaps, as mentioned earlier by Prof. Azam, between sustainable investor and Sukuk investor who aim to place their money or their fund in manners that comply with certain values. Other positive factor that may determine, that may be a catalyst for the future direction of Green Sukuk include the design of Sukuk by itself, the nature of Sukuk, which is naturally supportive of being green because it requires a specific pool of asset, yeah, to justify the profit or return to the investor. Also, the progress of Green Sukuk is and has evolved as an indispensable part of the natural evolution of the global Islamic financial market in Malaysia and globally. So to conclude, Green Sukuk is a good model, I believe, to finance sustainable infrastructure as well as to help bridge the gap between both a conventional or sustainable and Islamic financial world. Both sustainable investor and Sukuk investor aim to use their money in manners that comply with certain value. That's why Green Sukuk may attract the Sukuk investor as well as the conventional environment focused investor to participate in Green Sukuk, because Sukuk by design is structured based on specific pool of asset. With that, I end my presentation, and perhaps we may have some Q&A session after that. Thank you very much for your attention. Over to you, Ms. Consilz.
Thanks, Doctor. Thank you very much to Prof. Maria and Dr. Mahbubi for an interesting talk. Now, if anyone has any questions, please kindly post it in the message box. I'm sure our speakers will be pleased to answer them. All right. While waiting for the questions to come in, I have some questions here for our speaker this evening. Climate change accelerates ESG risk, yet there are also opportunities. Only those that are prepared will be able to tap on such opportunities. Dr. Maria, would you please share your insights on how businesses should practice ESG? Prof, please unmute yourself.
Thank you for your question. I think that we need to reinforce, the first thing that we need to reinforce is that business as usual is not possible anymore. We need to shift from the short-termism that is putting pressure on shareholder to a perspective that put together short-term and long-term, and that privilege not only the shareholder but an agreement between the stakeholders. The stakeholders that include not only the investors, the managers, but all the owners, but also the regulators. I think this is a very, very important idea. The second is that is sustainable and responsible investment cannot be thought as an opportunistic in a opportunistic view. I think that it should be in a very responsible view in order to avoid greenwashing, in order to indeed implement sustainability integration. But I think that this nowadays is a challenge because of a lack of standards. Like standards not in terms of ethical finance, not only for investors, but also for also the issuers. I think the talk about the green sukuk, it was really very interesting for me. I did not know anything about this. Was really because I think that the main concern of this green sukuk project is to avoid this kind of greenwashing, is to really have green assets underlying the financial assets. And this is a challenge nowadays in terms of the Western, there's Europe, America, Latin America, or even North America. This is a challenge to have really a regulation that could cope with this kind of misleading attitudes in terms of the ethical finance. So I think that we need to consider the end of the short-term perspective. You need to consider the stakeholders' perspective, and we need to consider the regulation also of this ethical finance. In some way, we need, as Dr. Ali said, the government support. This is a demand also, I think, of the industry, that is demanding standards. Without some kind of standards, it will be very difficult to advance in this ethical finance. Thank you.
Thanks, Maria. Okay, so we have a few questions came in. All right. We have this question: are there any tax benefits for investing in Sukuk in Malaysia and other countries? Dr. Mahbubi, probably you can answer this question. Thanks.
Thank you for the question and for forwarding that question. I will try to respond in the context of Malaysia. Perhaps Prof. Maria will assist me to look at the tax incentive from other countries like Europe. As for the Malaysia, as part of the government aspiration, to make Malaysia as a green technology hub by 2020, as well as the home for SRI, or socially responsible investment, the Malaysian government has introduced a number of incentives for the issuance of SRI Sukuk, including green Sukuk, such as tax deduction for the issuance cost of SRI Sukuk, tax incentive for green technology activity in energy, transportation, building, and other green related project. The government also introduced a special financing scheme, green technology financing scheme, with a total fund allocated of 5 billion ringgit until 2022 to support the development of green technology. So in a nutshell, yes, the incentive is there, especially for the issuance cost of the green Sukuk in Malaysia. I'm not aware in other jurisdiction, because so far many countries issued green Sukuk. As far as I'm concerned, only Malaysia and our neighboring country Indonesia, as well as UAE, and one Sukuk issued by multilateral institution. And we have only a total of 12 green Sukuk issuance outstanding currently in the market. That's all. Perhaps my response to the first question.
All right, thanks. Thank you. Okay, so we have this question from Dr. Liu, all right, related to greenwashing. So, Prof. Maria, globally, how much firms' capital expenditure and CSR expenditure improve ESG scores, firm valuation, and overall improvement in global environment?
Can you repeat the question, please? Can you repeat?
How much firms' capital expenditure and CSR expenditure improve ESG scores, firm valuation, and overall improvement in global environment? Question from Dr. Liu.
Well, I do not have the huge amount that has been invested. I am considering here a report from the KPMG, the consultancy, and said that this has been growing, and the driver of the process has been the institutional investors. And but I do not know the amount. We have only some ideas about the amount that is required in terms of the future. But up to 2019, the amount of investment in the green economy has been around 49 billion dollars, and until 2050 we need 50 trillion. So we need really to scale up climate finance, because if we consider every year we invest only 50 billion, then I do not know if we can really get this gap or fill this gap till to 2050. So I do not know exactly. The amounts are really not so easy to get. We know we have some ideas, because all of them are surveys, and we have only the main actors, and at the same time we have some ideas about the global amount. So it is not easy to get this kind of information.
Thanks, Prof. Maria. We have another question here. Bangladeshi Islamic Bank is really Islamic Bank? Dr. Mahbubi?
Well, that is quite a provocative question, but let me briefly respond to the question. Is Islamic Bank really Islamic? I think not only specific to Bangladeshi Islamic Bank. We have to understand, when Islamic Bank is introduced, it is basically intended to facilitate especially Muslim, to comply with their religious teaching, especially on the prohibition of usury or riba. That's why Islamic Bank is introduced back in 1963 by the establishment of Medgamer Bank in Egypt, and now we have more than 600 Islamic bank globally. Even 70% of the total global Islamic financial asset globally is dominated by Islamic bank. So the idea of the establishment of Islamic Bank from the very beginning in Bangladesh, in Malaysia, Indonesia, is basically to offer a Sharia compliant alternative or solution to the conventional finance, to conventional bank. And of course, to ensure that Islamic Bank is really Islamic, we have set some governance structure, Sharia governance, including the requirement for having a dedicated Sharia Advisory Council. In Malaysia, we call Sharia committees, comprising at least 5 members, to ensure that the operation, activities, and product as well as services of Islamic Bank are end-to-end Sharia compliant. So to make the long story short, if you ask me, is Bangladeshi Islamic Bank Islamic? Like other Islamic bank, if they have proper Sharia governance, especially they have the Sharia Advisory Council, Sharia Advisory Board, of course, they are Islamic, and if you are Muslim, you are obliged to participate in Islamic bank. And when you participate in Islamic bank, you are free from any liability, even though in reality, for example, there are some shortcoming, some error, some mistake, some weakness in the practice of the Sharia principle, but still the one who is responsible for the Sharia compliant aspect is not the customer, rather it is on the Sharia advisory board. This is my response. Thank you.
Thank you, Doctor. We have a few more questions. All right. This question from Dr. Liu, related to green financing, Islamic or non-Islamic. Yeah. So how does green financing reconcile the need to maximize investors' wealth and the need to protect the environment? Perhaps Prof. Maria, you want to take the question?
Well, this is the conflict. This is the conflict that we have, and that is why there is the emergent corporate diplomacy field or discipline in order to think about this, because I think that we need to realize to put in some really clear way there is a conflict between this maximization of wealth in terms of the short-term perspective and the environment. This the history of the last decades has shown this. So we need to change that. We need to change this. We need to change this business, and that is why it cannot continue to be the maximizing perspective of the short-term perspective. This cannot be. There is a conflict. That is why the corporate diplomacy perspective said we cannot think about the shareholder, the investor. We need to think about the stakeholders. This is not easy. This is the conflict. That is at the core of the very capitalist system. You have this conflict in the non-Islamic culture. You have this conflict that the corporate perspective diplomacy tries to bring some thoughts about this, because if we cannot think in terms of the short term, we need to have a long-term perspective. We cannot see only inside business. We need to be we need to check what is happening outside in terms of society claims. So I think that that is why the values are being brought inside the discussion about business today. We cannot continue with this maximizing perspective that without ethics, we need this a new approach. And this has been, that is why I brought this today. This has been in the non-Islamic perspective being brought by the corporate diplomacy perspective. Okay.
May I add from the green sukuk perspective, Dr.
Yes.
Yeah, for me, green sukuk, just like other sukuk instrument, yeah, it is only a Sharia compliant investment instrument for financing, for funding a certain project. The only difference between normal and typical sukuk and green sukuk is on the target benefit, on the use of proceed, where under green sukuk, the proceeds are used to preserve the environment, natural resources, conserve the use of energy, promote renewable technology, and reduce greenhouse gas emission. In particular, in the context of Indonesia, in Malaysia, it should fall under the specific SRI eligible project. But in terms of return, as far as I'm concerned, especially for the green sukuk that have been issued in Malaysia so far, I don't see any much differences and any significant gap between the return offered by the issuer via normal sukuk or the return offered by issuer in green sukuk. For example, let me take one example, a solar sukuk programs issued by Quantum Solar Park Sendirian Berhad. up to 1 billion ringgit. Yeah, in 2017, the green sukuk offered a fixed return up to 4.81 to 6.16%, which is relatively similar, yeah, to the normal and typical green sukuk. So as an investor, I don't think you should need to worry. Yeah, you need to worry on the return, because as a form of sukuk, the return in green sukuk is quite competitive compared to the typical sukuk. The advantage of green sukuk is that your fund will be used to support and promote the ecological sustainability. That is my humble observation. Thank you for the question.
Thanks, Prof. and Doctor, for the answers. We have this question. I'm not sure, probably Dr. Mahbubi somehow answered. Is there only green sukuk as an instrument to support the ecological sustainability? How about the other instrument?
Yeah, of course, if the funding is sourced via sukuk, then green sukuk is not the only one, is one of the common and popular instrument to support the ecological sustainability. But also we have SRI sukuk, socially responsible sukuk. But if we move to banking, for example, especially since 2017 in Malaysia, the financing facility offered by the bank, as mandated by the regulator, namely Bank Negara Malaysia, should not only focus on the profitability and the feasibility of the project. Rather, the financing facility should also take into consideration the impact, the positive contribution toward planet as well as people, or society. So via VBI, value-based intermediation, Bank Negara Malaysia push the industry moving forward to consider the three aspects, in the assess in offering the financing products. First on prosperity, of course profit. The second one is on the people. The third one is on the impact toward planet, or what we know in accounting framework as triple bottom line framework. So I think the idea of promoting ecological sustainability does not only came from green sukuk or SRI sukuk, but can also be sourced from other instrument, like in banking via its socially responsible financing. In share, for example, other Islamic capital market instrument and other instrument. In other instruments. So green sukuk is only one of the instrument, not the only one instrument.
Thank you, Doctor. Okay, looks like we don't have any more questions coming in. All right, and we are actually oh, hold on. Yeah, we have one more questions. All right, from Dr. Liu. Howard University Professor Lucian Bechuk suggests that firms should be incentivized to act long-term to become a good corporate citizen. How do green financing fit into these incentive structures, and how can incentive structures which include green financing can be given to firms? Prof. Maria, maybe you want to answer this question.
I think that this is a very important question because of the idea that there is a lot of costs to in terms of the business. There are a lot of costs to be addressed in the implementation of sustainable integration. So perhaps some kind of incentives, but The problem is also the monitoring, the reporting of these kind of incentives, because I am very, I am talking from my Brazilian perspective, and here all these scheme of incentives are always very, very problematic, because at the same time, sometimes the targets are really good, but then the incentives are used for other means. So I think that it is a good idea to think about incentives, but you need to increase the monitoring, the supervising, the fiscalization of this, and this is very costly. So at this, you need to find the balance between the incentives at the cost of supervision and. So far, my experience, and I can talk in Brazil. My experience is that these kind of incentives are good in theory, but not in practice. So the Brazilian economy has not really been promoted in terms of the green economy by the use of incentives. But I think that what the kind of incentives can be good, not in terms of the direct business, to the investors. Perhaps some kind of tax in incentives to the investors can be, considering my Brazilian experience, can be good. Because here in Brazil, we only have incentives for real estate. So real estate bonds, for example, here in Brazil have a lot of incentives, but perhaps it is the time to introduce some kinds of incentives for investors in terms of the green financial assets. So if I have to say, it's a very good topic to discuss incentives, but in my Brazilian experience, I would not apply these incentives to the business directly. I would give these incentives to the investors in terms of tax, some kinds of incentive taxes, because so far we do not have here this. We have only real estate incentives. Thank you.
Thank you. Thanks, Prof. Maria. We have one more questions. All right. And I will say this will be the last questions. Thanks. And because of the time constraint, yeah. So look at this question. I think we will get Dr. Mahbubi to answer it. Recently, government of Bangladesh have issued Sukkot to provide fresh water. Would it be categorized as green Sukkot?
I'm not sure as to whether Bangladesh has introduced the SRI or eligible SRI project or the framework for the eligible SRI project. But if we adopt the Malaysian framework under its revised SRI Sukuk framework by the Securities Commission, the Securities Commission outlined some eligible SRI project, including natural resources. One of the examples of the project under natural resources is the development of water infrastructure, treatment, and recycling. So this can fall under natural resources that may be eligible for SRI project, and the Sukuk that is issued can fall under a green Sukuk instrument.
Thanks, Doctor. So we hope that our speakers answer all your questions. All right. So in Malaysia's our budget 2021 has embedded sustainability for the first time. Yeah, the budget is aligned with the UN SDGs. And the government has provided a comprehensive list of measures in the budget to support the private sector's sustainable initiative, from funding, adoption of green climate technology, to strengthening of natural resources and biodiversity. So among the key budget proposals include continuations of successful Green Technology Finance Scheme, GTFS, with an allocations of 2 billion ringgit Malaysia to encourage the private sector participate in green technology. And we have plans to create a sustainable financial hub and position Malaysia as a regional hub for a sustainable lifestyle. We also have 600 million ringgit Malaysia worth of funds for forest plantation development and impactful high-value farming projects. And we also have all of the issuance received multi-fold oversubscription by the investors. And given that 30% of the investors in the Indonesian green Sukuk were green investors, the trends in green project and green Sukuk as a financing model represent a new avenue for SDG implementation, generating economic value. So I guess we are on the right track. Yeah. So with this, we end the webinar today, and we will have the recording available on the Center for Market Education YouTube channel. We will put in the link there, all right? And we are reachable more at the Center for Market Education at gmail.com. So thank you very much for your active participation in this webinar. I hope you enjoy the program. Take care and stay healthy. And thanks to our speakers also. Thank you.
Thank you.
Thank you. Thank you,
Thank you.
Consilz.
Bye.
Thank you.
Thank you.
Bye.
Consilz.
Bye. Thanks.
Maria, thank you.
Thank you. Thank you very
Carmelo,
much.
thank you.
Thank you. Thank you, everybody.
Thank you, everyone. See you.
Xiamen.
See you.
See you.
In touch.
In touch.
Sure.
Thank you, Professor Azam.
Thank you very much. Thank you for inviting us to be partner of this event. Okay, looking forward for other cooperation in the future. Okay,
Sure,
thanks.
sure. It was our honor. Thank you very much.
Good night.
Thank you. Good night. Thank you, Consilz. You
All right.
moderated very well.
Thank
You were
you.
very well prepared. And I'm glad now that we kicked off after a few initiatives, we can pull in more of our fellows and team in future initiatives.
Sure, sure.
Okay.
All right. Have a good
Keep in
night.
touch.
Yeah.
Good
Keep
night.
in touch. Yes.
Bye.
Take care. Yeah.
Okay.
Bye.
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 Amir, good night, Amir.
Good night.
Thanks, Amel.
Good night.
Thank you.
Dr. Tan.
Keep in touch, yeah.
Okay.
Yeah.
Thank you, Amir. Bye. Ciao.